Hello and welcome to Bourbon with your broker. My name's Earl Music, and my very special guest today is Liz.Owens. She is with Land and Home Mortgage, and she has some really cool things she's going to talk to us about today. Stuff that I don't think, stuff about mortgages that I've never known before. And so I'm really excited to talk to her. I think if you stay tuned, you'll really enjoy everything she has to say. But today we're going to start with making a drink that I invented one day, trying to figure out something my wife would drink. And so we're going to combine coffee and whiskey. Anyone who has anything to do with real estate needs coffee and whiskey at all times. So I thought, let's put them together. And we're going to start with Texas bourbon. This is a Texas straight bourbon. It's actually barrel proof. And fantastic bottle here. My mother purchased this for me and brought it back from Texas last year. So Liz, are you much of a bourbon drinker?
I diddle with it because Beth on the team loves bourbon. So I have to suffer with it every now and then.
All right.
No. I'm a Coors Light kind of girl.
I got a great joke about Coors Light. We will not share on here, but
I want to know after.
Yes. So this is going to be my little drink. I've affectionately called it the Drunken Broker, and so this is what we're going to go with today. But since we're making two drinks, of course, if you're doing this for yourself, cut it in half. But we're going to do 3 ounces of bourbon. Maybe a little more. Then we would do a ½ ounce of, this is called the Drunken Bean. It's made right here in Idaho. And so it'd be a ½ ounce for a single serving, but we're going to do a full ounce today. And the Drunken Bean is very sweet. So this is all the sweetener you need. And then I'm going to use Willie's Coffee Cream Liqueur, and we're going to give it a little splash. Give it a good stir. You excited yet?
I'm so excited.
And then we're going to strain it out over our homemade clear ice.
Not really fair.
All right, Liz,
That's
thanks for
fine.
joining me.
Thank you. I'll maintain a smile. No, it's good.
That's good.
It's good.
I like it.
Yeah,
That'll drink.
that'll drink.
All right, let's sit down and have a conversation.
Sit down and have a conversation.
All right, Liz, thank you so much for joining me again. I really
pleasure.
appreciate it.
My pleasure.
So one thing I wanted to talk to you about, this is something that, and of course I have my own reasonings on my side, but I've noticed people today want to buy real estate like they buy cars, where they drive around and they find a car and then they just use whatever lender the car dealer tells them to use. Can you explain to me why it's a good idea to get pre-approved before you call a real estate agent or even start looking at real estate?
There's a lot of variables that could go into a pre-approval to where you might not qualify. Something could be in the way of a smooth and flawless closing. And to keep the experience good and up at a higher level, because how many times do we buy a house? 2-3 times out of our lifetime, right? So it's the biggest asset you're probably going to buy in a long, long time. Why not have a smooth and flawless closing versus a terrible transaction because you've got this coming sideways at you, you've got this request coming, you didn't know you needed to be on the job for 2 years, you didn't know that you could have got a different avenue of a pre-approval from another lender that could use some down payment assistance. There's a lot of variables that can come in to screw up that experience for you. So if you get with a lender and get pre-approved and know your clear mortgage plan, and set yourself up for success. Your lender's your partner, your realtor's even more grateful for helping guide you through that, because the realtor has so much on their plate when it comes to a transaction. You know, the lender has one piece, but we need that piece to be solid for you to be able to close on time and keep your transaction in order.
Yep, exactly. And from the real estate agent's perspective, in which I guarantee you can find a young agent who will put you in their car and drive you all over Kingdom Come looking at houses. But it's really hard to show people, let's say $500,000 houses, and then find out they can only get $400,000 in a loan.
Right.
And then all of a sudden the houses they're looking at don't compare to what they were looking at.
Yeah.
And so it makes it a longer process, a harder process. And so, yeah, getting pre-approved before you start shopping is always a smart way to go.
Absolutely.
Yep.
Absolutely.
Yep.
The instantaneous minds that we're at now, I mean, even you go on Amazon, oh, I like that. Click buy. One-time touch. That's what a lot of the mentality goes towards housing.
Exactly. Yep.
I like that house. I want that house. Well, if you don't have a clear mortgage path or a plan, you might not get that house. And you might be disappointed time after time and time again. So my advice is get a clear mortgage path by going to a mortgage lender and getting pre-approved.
Yep. And this is something else I always counsel my clients before they call you is tell her everything.
Yeah.
Because you're going to find out.
There's so many who don't.
Exactly. And so there's nothing worse than, going through the process and finding a home and all that. And then, oh, by the way, you failed to tell me that you quit your job last week and moved to another one.
Yeah. I'll tell you a quick story, and it's been a few years, but she marked on the application, no foreclosures, no deed in lieu, no nothing like that, no negative, no derogatory. And she had great credit. I had no reason to suspect differently. But I had a report come back from an underwriter, because that's what they do. They run their due diligence and double check, right? I mean, because that's how it works. It comes back, she had a foreclosure. So I asked her, I said, you said you didn't have any foreclosure, so we might have to go a different path now. And she said, I didn't. And I said, well, you did. And I showed her the report. And she said, well, I just gave my keys back to the bank and told them I didn't want the house anymore. That's a foreclosure. She really didn't understand the process. But that's a catch-22 right there. She didn't think she did, but she really did.
Well, yeah, because that's the only way the bank can take it back is foreclose on it.
Exactly.
And so, so that's the legal process they have to go through, and it's on your credit.
Yeah.
So
that's the only one I've ever had, come back on me after the full questions and handling it professionally. And I was the only one that's ever come back, but it was sure a shocker.
Yeah. And, and this kind of leads into another thing, too, I wanted to bring up is I firmly believe in finding a experienced real estate agent.
Yes.
It can make a huge difference. And I was green at one time, and you got to get experience some way. But I feel the same way about mortgage brokers. And especially when the client is honest with you and tell you their whole situation and what they're doing. There's programs out there that you might get them into that maybe a mortgage broker who just started 3 weeks ago that has no idea about.
Yeah.
And so, having somebody like you with a lot of experience and, I've always found extremely helpful. So I've always loved sending you clients, and you've been able to help a lot of them. I even had somebody one time, I remember I sent them to you. He had terrible credit. And I said, well, let's call Liz. Let's see what we can do. And you helped him, and it took 2 years to get his credit fixed.
Yep.
And then he went and bought a for sale by owner. But that's all right. It happens.
Yeah, that's crazy.
Yep. In fact, he just lives right down 1 block away.
Crazy.
So he's my neighbor now.
Oh, that's so funny. You're like, what happened?
So that's the moral of this story, though. If you find out something great that Liz tells you today, please remember the realtor that brought that information to you.
Yes. Yeah. I do a different tracking now. Where I don't want to give away my tricks of the trade, but I do track. I do track. So as people refer, you watch that, and I make sure we pay back tenfold.
Yeah. So one of the things I really wanted to bring you here and talk about was a new loan program that you have that's available, and I think is going to be huge for our community, where they can actually buy a piece of land, get a prefab home, even get your well and septic and driveway, and they get to put it on one loan, one closing,
Yeah.
How does that work?
It's super cool. So it's a construction loan, but it modifies. So it just rolls into a 30-year mortgage or 20-year or 15, however we set it up for your particular situation. But it gives you the ability to have one closing, one set of fees, not two sets, where before it used to be you do a construction loan and then you have a certain amount of time to refinance that into a term loan. Well, now it's all in one. Yeah. And so I do this a lot. I'm quite good at it. I'm knock on wood. We do a good job as a team. We keep it nice and smooth, and we know what documents we need to go after. But we take a lot of that heat on as a team, and the borrower, we're just chasing them down. We don't have to do that. Yeah. We just go after the contractors, and we work really well with the builders and a lot of retailers in this market, and we put it together so they can buy the land and do the home at the same time. All together. They can buy the land with a contract, or they can own the land and have it become equity, which is really cool then, because they already have the land. They already bought it. They put all their cash into these 10 acres for $250,000 because it's a beautiful view, and they have a hard time finding construction. Most of these really good construction guys are booked out 1.5 to 2 years.
Yeah, that was something I was going to ask, kind of, because, the land is there and it's available for purchase right now, but the home might take you a year. The septic and well might take you 6 or 8 months. So I imagine the loan works that they close on it, the landowner gets paid.
Yep.
And then the rest of the money is sitting in escrow.
Yep.
And waiting, so when the septic's done, he gets paid, and then the well's done and he gets paid, and the driveway and the house, and so...
Correct.
And so it's just, that is huge. I don't know if anyone out there appreciates how big that is.
Yeah.
But there's a lot of lenders that won't lend on land unless there's a well already on it, or, there's just so many hoops you have to jump through. Well, you used to work at U.S. Bank. So
I did.
You know how hard some bankers are on purchasing land. So that is so awesome that you have that service. And
I love it because it's just another way to make that dream happen.
Yep,
that dream of homeownership happen. And I feel like homeownership is the quickest way to personal growth and personal wealth.
Oh, easily. It is. That's why it's the American dream. It is. The house we're sitting in now, I was able to purchase it pretty reasonable, and I just had to sit here and enjoy it. Now it's worth more than twice what I paid for it.
Right. That's what I just had this conversation this morning with somebody at my desk, and we were going through her loan and opportunity, and she's like, I wish I would have bought last year when the interest rates were lower. And I'm like, no, you don't. No, you don't, because look at that house, what it was priced at, if it would have been priced last year.
Yeah.
Now look at this year, it's $75,000 lower. You're getting a better cost.
Yes.
Your rate is temporary.
Yes.
You're going to be able to refinance it eventually, but your cost will never go away.
We actually did some math on some different numbers in our office and looking at it, and the amount the prices have come down, it pretty much equals the interest going up. So the payment for the person is almost identical as it would have been last year.
Exactly.
And so, and actually, it's a great segue into what do you think is going to happen with interest rates in the next year?
Oh, that crystal ball. Could you bring that out? The interest rate, I watch a lot of analysts. Barry Habib. Big fan of Barry Habib. If he called me on the phone, I probably couldn't even speak. But there's a lot of them that I watch on a daily basis to see, because we didn't expect this last decrease. We really expected it to increase a little bit, but the decrease happened, and it's just adjusting to inflation still. They're still trying to fight it. We feel like it's going to be coming down a little bit more towards the spring, but I think this is a temporary thing that it's dropped down. So if you're going to lock. That's how I look at it. Just lock now. Don't hesitate. But I think it's going to come up a little bit. It's going to come down, but towards the end of the year, they are saying 5.4, little under 5.5. But we don't know. We really don't, with the inflation and everything, the current administration.
And quite frankly, though, 5% interest, anywhere in the fives, is fantastic.
Yeah. Yeah.
I mean, you probably hear this a lot historically. That's a really low number, but 5 is beautiful from a homeowner and to keep the economy rolling.
Yes.
And banks. I mean, it's just that's where it needs to be.
Exactly. Exactly.
And quite frankly, and I mean, I don't like to get super political, but that's probably one of the things I could point to that Trump, really asked the Fed to keep that interest rate low and keep it low and keep it low, and which is probably some of the reason why we're in where we are now with interest rates. But 5 is great. If you can get 5, do it.
Yes. I remember my husband and I got our first loan back in 99, 2000-ish. And it was above, it was right at 8, I think, right, 8.5.
Yeah.
And we were doing cartwheels because our parents had teens.
Yeah.
So we're like, neener.
Yep.
Look what we qualified for.
Yep.
And then we did take advantage of the lower interest rates. Last year and a half. Who didn't if you own the house? You took advantage of it. But as it comes up, our deposit rates will start increasing. And that's what the banks need. Lenders need deposit rates to increase, but we also need those interest rates to fall in line. We can't have low interest rates and deposit rates high. It doesn't work that way. And so we want to see our 401ks, our retirement plans, any of our permanent deposits, we want them to grow.
Yeah. Heck, just having a CD that pays you more than 0.25%.
I want a savings account that pays more than 0.0000005.
Yeah. Used to be if you had $1 million sitting in the bank, you could live on the interest.
Yes, not owe it.
Exactly.
It almost got to the point where you're gonna you have money in me, you owe me.
And here's a little story from the past. My wife worked for Cell Equity in Boise. Somebody comment on this video if you remember Cell Equity in Boise. But they threw a gigantic pizza party for all their agents when interest hit 6.5%. It was the greatest thing that ever happened to real estate agents. And so that just gives you kind of some perspective of where interest rates are now and where they have been. The market's not. I mean, and the old saying is the best time to buy real estate was always 5 years ago.
Right.
So, interest rates are what they are. Don't let that scare you from buying. If you can afford a home and you need a home, buy your home. If we're lucky and interest rates go down in 2 years, refinance your home.
Yeah.
If they go up, then you'll be going, man, I'm glad I got it when I did. Exactly.
Look at the cost
Yep.
I was able to get because equity is going to grow. We still have a low inventory. We do not have enough houses, even with developers trying to get subdivisions. I just visited us over in Eastern Washington, a little further in. I was visited with a developer just the other day, and they're going to put together manufactured home development because it's faster. They're built better. It's not the same as the trailer house that we all get used to.
Right.
They're not the same anymore.
Yeah.
So they're putting them in as fast as they can. And those are going to fly off the shelf no matter what price tag they put on it because people need homes. But their idea is affordability. And I asked him what what encouraged him to do this. And he said it was teachers couldn't afford a house anymore. And so that just choked me up. It's like, oh, gosh, this is an awesome thing that you're doing. So, but it's urban. It's not here in our rural area. Our rural area, we still need a lot of homes, so our equity is going to grow.
Yep, for sure. And that is the thing. There's a lot of people going, oh, there's a real estate bubble coming, in which we had a superheated market. Yeah. It was superheated for a while. It's definitely cooled down, but there's not going to be that 2005 bubble that we saw for a couple of reasons. One, in which you'd have been, not that you were involved in, but you definitely saw the amount of lender fraud that was going on that spurred that bubble then was huge. And really had a lot to do with it. But right now, there's a demand for housing, and the housing demand is still there. So prices got to where people couldn't afford it, but they still need it.
Yeah.
And so there's no bubble.
We don't want to live with mom and dad forever.
Yeah, right?
And I don't want the kids living with us forever.
Exactly.
All three of my kids are out, so I'm good.
My kids know their 18th birthday, the lock changes.
I still encourage him to come home. Stay Christmas night. But no, it's fun. But no, I agree. The equity is we're predicting at least 5 up to 9% equity this year, growth still. And then go back to our normal 3, 4, 5% year over year. It wasn't normal the last 3 years. My son bought a house, and he used Idaho housing. It was pretty cool to be able to refer him to that program and explain it out to him. Got it with no money down, and in 2 years, he had 20% equity in that home and was able to repay everything. So that time is gone, and I told him that do not get used to this.
Yeah, right. Yeah.
This is not normal.
Yeah, don't fall for that.
No, but yeah. So it was good. It's good for the equity. It's good for us growth-wise. It's good for their personal wealth. We need to encourage home ownership. But I agree with you. Get pre-approved first. Make it a nice process.
Yep. And, there's another reason I do like to recommend that people call you when they're looking for a mortgage is you're an Idaho gal.
Yeah.
You were born here?
Nope.
You were raised
here?
here? Kuski, right?
Been here 26 years.
Yes.
Yeah,
Okay.
we started in Kamei. My husband's family came from Kuski and Stites. They're Stites. I better say Stites because they are Kuski graduates, but Stites.
I tease them. People who live in Stites aspire to be from Kuski.
Yeah, we call it Stites America.
Yeah. but you're very familiar with the area with Idaho County.
Yep.
A quick story. I sold a property to some people. They were getting actually a prefab home built for it, and the lender that they used demanded that they have a building permit. Well, there are no building permits in Idaho County.
Idaho County. That's funny.
And this is the crazy thing. So the lender said, "Well, go to Nez Perce County and buy one from them."
What?
So he had to have a building permit in his file, and Nez Perce County's like, "Sure, we'll take your money because all it is a tax."
Yeah.
And so he got a building permit. And then he needed an occupancy permit.
We
don't have occupancy permits in Idaho County. So again, he went and got one from Nez Perce County. And they gladly took his money. But anyway, so that's one reason why you need a lender that knows what the heck's going on around here.
Yeah.
Yep.
So there's something that goes through the state that is a contractor's document that they upload, and stuff. And usually within a day or two of them submitting it, it's cleared. They sign off on it. The inspection's cleared. And usually there's some sort of inspection, whether it be the health department because it's a well in there.
Yep.
There's some sort of inspection done.
Yep.
You don't have to have the occupancy certificate. We just go check, not applicable.
Yep, perfect, yeah.
So yeah, I do a lot of builds in for manufactured factory built homes in Idaho County and Lewis County, Clearwater County. Yeah. You want to keep naming all the counties? I'm licensed in 3 states.
Yeah, nice. And we're now our brokerage now is covering all of North Idaho. We were North Central, but I have agents in Bonner County now and in Coeur d'Alene, which is Kootenai County.
So one of the things I wanted to talk to you about was one of the most underserved borrowers in our area, and that's self-employed.
Yes, for sure.
You know how many of them say they just don't show income on the taxes, but what I found is majority of them, I think there's 17 million in this direct area that are self-employed. Many of them, 50% of them, are the millennials. Did you know that?
Doesn't surprise me. Millennials get a lot of bad raps, but a lot of them are doing some really cool things.
They are. And did you know the top tier of the millennials are turning 40?
Really?
Isn't that hard to say?
Yeah.
It's really hard for me to say because I'm not a millennial. Yeah. I wish I was.
No. I'm glad I'm not a millennial, but I'm really close, despite my looks. I'm really close to that generation, but I'm definitely an Xer.
Yeah, me too. I'm right there with you. But they're having kids, you know, and they want home. They want to buy homes. So that's the millennials are at 40 with having children, starting families, ready to buy a home. That millennial group is huge. And with 50% of the self-employed people in our area be in that age group for self-employed, right? We have to have something to fit them. And I have it. I have it.
What is it?
So I have bank statement loans. So
Good.
they don't have to have taxes. They do have to have some bank statement things, so they can give us a call. We can walk through it with them, and there's not as much documentation as you would have on a regular mortgage loan.
Yeah. It was very nice because, I mean, I'm self-employed. My wife's a real estate agent. She's self-employed. My parents were always self-employed. I mean, my grandfather's a farmer rancher. I mean, we've always had that mentality in my family. And it is extremely hard to get mortgages.
It is extremely hard to get mortgages for self-employed because I did come from that banking background. I came from the standard lending of the qualified mortgage through the agencies, Freddie, Fannie, you know, FHA, VA. There's a lot. I deal with a lot of different mortgages. I was so excited to really dial this down, and my team dissected it to make sure that we had a checklist. We have everything, so it is the same smooth and flawless closing I do and everything else. It's just through a different channel.
That's awesome. So if you're self-employed and looking for a house in Idaho, what other states are you in?
Montana, Washington.
All right.
California.
And California.
Yeah, I hate to tell you.
Liz is the one. Oh, it's okay if they buy another house in California. we kid. It's funny. Californians get a lot of bad raps for moving to Idaho.
They do.
And there's a lot of them coming here. But, you know, the history of Idaho, though, if you look at it, because I've been here a few years, our governor was a Democrat, our senators were Democrats, our congressmen were Democrats. And there in the late 80s and the early 90s, Californians started flooding into Idaho and made us the most conservative state in the union.
Happy with that.
And that's why...
That's what they all say. They're happy with that.
And that's why California is as liberal as is, because all the conservatives left there and came to Idaho. And so the Californians I meet that sell property to are just as conservative, if not more, than the people who are already living here.
Yeah.
And so every once in a while I find that one Yahoo, and they usually don't last very long here. So Californians get a lot of bad raps, but... we like to kid them.
I had a call, and it was from an out-of-state person. I'm not saying what state it is, but they were like, "Are you packing? Am I what? Am I what? I could, I guess, if I wanted to."
Yeah. I did have a California one time that called me and was asking me a lot of questions, and finally she said, "Are there any hospitals in Idaho?" And I said, "Yeah, we have one. It's about a 4-day wagon ride to get to it."
Oh, that's fun. We are 20 years behind the times, but we like to keep it that way.
Right? Yeah, so we all get those interesting phone calls.
There's some good ones, I tell you.
Yep, for sure.
Not enough time for those calls.
Oh, my gosh.
But yeah, those kind of, and there's another cool thing that I have for investors. And that's another one that you run into if they have 10, 15 properties already. They're like, what all documentation do you need?
Yep.
Well, I'll tell you what I need. I need you to fill out my application. I'm going to pull your credit. We're going to do a full credit review. Make sure you don't have any lates or anything like that, and go through it. Good credit, right? We're going to verify your bank accounts because we need to show that you have the money. And you're not like some drug dealer, terrorist or something like that. You got to verify the money. It's yours.
Yeah.
And then usually if they have good credit, put 25% down, I need a lease for that investment property.
Okay.
Or an appraisal with the rental amount. As long as it equals the payment at 100%, we're done.
Really?
Yeah. I
have a listing I'm about to take. And it's an old bar and restaurant, but it was converted. Most of it's been converted to apartments, and it's bringing in about $2,500 a month, and the seller's looking for a little less than $200,000 on it. I mean, it should cash flow pretty easily. And so it is an old building, though. Old.
Nobody goes by age.
Okay.
Really, they go by safe and health concerns.
So what's been remodeled is really nice, but half of it hasn't been done anything yet. So, it would be perfect if somebody could buy it, especially if they were contractor minded or had some of that background, and go there. There's probably another 5 or 6 apartments they could put in there.
Wow.
Pretty easily. They just need the know-how.
It wouldn't fit this scenario. I mean, because every scenario is different.
Oh, yeah.
You know, I mean, every customer's different. Everything's different. So I look at the whole picture and see which way it's going to go. But if they have good credit and they've got some down payment, there's probably another program we can go with.
Yep.
You know?
Exactly. Yep.
Yeah.
Cool.
But this particular program is for single-family homes or non-warrantable condos. That's hard to find.
Okay.
You don't find lenders that do non-warrantable condos hardly.
Yeah.
So, and it needs to be not so rural. Can't be a farm. You know, can't have a barn. Can't be over 2 acres.
Yep.
I mean, they're pretty specific to just rental properties.
Okay. Cool.
Yeah.
So, we need to go back a little bit too, back to the experience thing. I have this funny image in my head when it comes to lenders, and I've experienced this quite a few times in my life. But I've been doing real estate long enough that when I see things, I go, "That's not going to fly." And I've had clients and other agents, "Oh, you don't know what you're talking about," and anyways, the mortgage person quite often is a salesperson. They're usually working on commission, and they sometimes will be used car salesman-esque of, "Oh yeah, we can do that." And then 4 weeks later, we get to the underwriter. And the underwriter, in my head, I envision a cave with a bunch of trolls and computers, and they're fed Mountain Dew and Doritos. And their one job is to find a reason not to make that loan.
Yeah, I feel that way on that's kind of why, you know, some lenders make changes, you know, and stuff, but not my recent companies. The underwriters have always been partners. And I don't look at them any differently. Because they have a job to do, and that's to protect the business. If we make a lot of bad decisions, because the sales team is like, if it breathes, it walks, it has a heartbeat, they can get a loan.
Can you fog this mirror with your nose?
Yeah.
I'll give you money.
Yeah, I'll give you money. But the underwriting makes sure that the business is there to give the money to the next person. You know, so I look at the compliance 2 ways, right? But the underwriters that are good, which I haven't met a bad one yet with my company. I can't. And the company I worked with before either. The underwriters were solid. I mean, they were your partner. They call you up and go, "Hey, this came up on the report. Let's talk this through. Maybe not this loan, but let's talk the other loan that would work and maybe some tweaks we can do." That's all a loan officer wants. I mean, I have had the days where I was underneath the desk. You've seen that meme where the girl's under the desk with the wine bottle crying? That was me. That was me, man. I had to make some changes when that happened. You know, or I used to have this whiskey bottle sitting by my phone. And everybody's like, "What's that for?" I said, "When the underwriter calls." But nowadays, that's not the case. I mean, they're trained differently. They want that loan to close, because if they don't push those loans through and help them work, they're not going to have a job either. Because they know the loan has to close for them to continuously be able to fund more loans. So I think it's a partnership, and that's what I coach to. And in my leadership role that I'm in now, I really am a good part of that pivotal section of making sure operations and the sales team work. You have to have both.
But that also goes to just tell your agent and your lender what you're doing.
It's
there's 2 examples that kind of jump out at me. One was a gal got approved for around $500,000, and she found a property for about $220,000, and she wrote an offer for it, and it was accepted. And she was working with an agent in my office. Well, then she wanted to go write an offer on another property for about $250,000, and she goes, "I'm approved for $500,000. I'm good to go." And I go, "No, you're approved for 1 property, not 2.
Oh.
And she's like, yeah, I'm not spending more than $500,000. I'm approved for $500,000. I go, it doesn't work that way.
Oh.
And so she really, really tried to get my agent to write another offer on another property. She wanted to buy them both. And I was going, no.
Yeah.
And she's like, oh, my lender said it's fine. I go, no, they didn't.
It'd be a different pre-approval letter.
Yeah.
Right?
For
Or
sure.
a different pre-qualification letter, because one is primary, one is going to have to be investment if they're that close together. Like, you can't have a secondary. Like, Grangeville's not that big.
No.
So if you have one on one side of the town and one on the other, you can't have a second home. Now you could if it was like up, in Stites up in the hill, and it's considered Stites or Elk City, in the mountains, and it's one of those cabins like that cabin I really like at the meadow.
Yeah. It's closing tomorrow.
I know. But yeah.
Yep. Yeah, the other one it was kind of funny. It was a partially constructed house, and they were buying it, and I was like, yeah, I bet you that lender doesn't know that's partially constructed. Oh, I talked to them. They're fine with it. And I'm going, I don't think so. Well, 3.5 weeks later, when they're about ready to close, the appraiser walked through the house, makes note of that. The underwriter sees it, and he's like, we're not lending on a partially constructed house.
Nope.
So
that's where a renovation loan helps.
Yep. They were just in the wrong loan. They ended up getting a loan. They ended up closing on it, but it was 5 weeks later.
Right.
And if they'd have just told the lender what they were doing, it wouldn't have been in that place. But they were just adamant. I didn't know what I was talking about.
It's so sad when they're not open. I mean, it should be an open two-way communication, and if you tell the lender, then we can go to the borrower and say, is this really the case? Is this the case? We need to look at a different loan product before we get started. But we also should be asking you the questions. And we should be asking the loan officer needs to ask the borrower all their questions. If they just take the application and it's good to go, another loan checked off, that's not being communicative. That's not helping them at all. That's just being an order taker.
Exactly. And it's just kind of funny, and it's not everybody, but it's just sometimes, the public, I don't know, they feel like we're the enemies.
Yeah.
And we're like, no, we're on your team.
Yes.
And I'm not telling you this to prevent you from buying it. I'm telling you so that we don't delay in you being able to buy it and that kind of thing. So,
like, you have contracts. I take the contract seriously, right? You have a closing date on there.
Oh yeah.
I wanted to close on time.
Yeah.
Or before.
Oh, and believe me, buyers, they are extremely upset when it doesn't close on time.
They're excited. Their bags are packed.
Yeah, they're ready to go. And it's always, and it never fails, it's like a dominoes of 7 houses.
Yes.
And everyone's moving over the weekend. They all want to close on Friday, which is the worst day to close. And everyone's, wanting to close on Friday, move on Saturday, and then something happens and closing doesn't, and then everyone's parked in everyone else's driveway. And there's a ton of things.
There's a lot of stress during COVID.
There's a ton, isn't there?
Yeah, there is a lot of stress during that COVID time frame. But that's past. People, there is no reason why underwriting has to be over one day. There's no reason why you can't process in a day or two, because we don't have the volume that we had. And we haven't done a ton of layoffs. Our support staff is there. In fact, we're repurposing them while they're waiting for more deals to come in. But we're having a busy month. We had a huge month last month. So, I'm knock on wood, doing my due diligence to keep things moving. But the industry wide, you're going to see a lot of movement because of these rates, because of the low transactions. There's people still relying on refinances. That's gone. The only people who are doing it are have tos or need tos, the type of thing. Like, they need to do a renovation loan. They don't have the equity, but they need to accommodate for a disability that's happened. I've had one of those. Had one where it was a divorce and she needed to cash out to pay off the husband so that she could keep the home, because you're not going to buy a home for that same cost that she had from a few years ago. So, there's need tos out there. And then I've got, I think we talked about this a couple weeks ago.
Yes.
Yeah, it was there's people who don't understand, younger generations or sometimes older generation, they don't realize the equity that they have in their home, and they're having a hard time since COVID, or they've had a job change, or they were let go because of downsizing, that they haven't been able to make their payments. Those people have equity in their homes and they don't even know it. You know, don't let the lender start foreclosure proceedings. Talk to a realtor.
Yes. Yep.
You could pay off that loan, sell the house, have some down payment, and not be in the dire needs or have a derogatory. Keep your credit.
Yeah.
You know, do something that's going to help you move forward, and that's where we come in. A team, a realtor and a lender.
Yep. And to expand a little bit on what you're talking about is there's been quite a few people in the country that, because of COVID and some COVID programs, haven't had to make a payment
for years
on their home, and some of them for years.
Yeah.
And Congress just extended it again, but at some point they're not going to be able to do that. And it is not a case of, start making your payment again and everything's okay.
Right.
They have to make up everything they missed.
Yes.
And so this is probably tens of thousands of dollars that there will be a day coming where the bank says, you have to make your payment current.
Yeah, luckily I don't know any of those.
I don't think I do either.
No, but yeah, they could come up. But there's also people who didn't go into forbearance, or they did do forbearance. You know, because you're right, they're going to have to. Most lenders did a forbearance to where it's not forgiven. It's not. They can't extend the term. You have to either rewrite the loan and qualify, right, or rewrite the loan on a rate term. Has to be better so you can qualify to keep that house. You should have sold it.
Yep. And this is going to be different than the real estate bubble before, when Congress bailed people out where they didn't have to pay their income tax on earned income.
Right.
And we can explain that to you if you ever want to know that. This is more like the student loan program. The government can't bail you out of this problem.
No.
They're not going to be able to come up with billions of dollars to pay your mortgage for you. And so there's going to be some people that are in a real tight spot.
They are, and that's when they really need to talk to you about doing a market analysis. You know, what am I worth? Where's my equity at? You know, who do I have to pay?
And probably if you're in that situation and you're worried about it, probably be proactive about it.
Yeah.
And get started, because that date is probably coming very soon, and maybe get ahead of the other million people who didn't make a house payment for the last 4 years.
Wasn't the student loans moved out to June?
Yeah.
Too?
Yep. They moved the student loan out to June.
You know, we've been so busy, I haven't really followed up on that part. I've been watching rates. But I'm pretty sure they got moved out to June. So, but kudos, because I've been talking to a lot of people who have student loans and qualifying them and stuff, and they've been making their payments. It's amazing. I'm like, good for you.
There's so many of them, and they're getting a kind of probably a bad rap. But my cousin's daughter, Artie Fogelson, just graduated from college. She worked her way all the way through college. She doesn't owe anybody a dime.
Oh my gosh!
And so, kudos to you, Artie. You did a great job.
Kudos.
And but yeah, you know, it's one of those. We're Gen Xers. You borrow the money, you pay it back, right?
Yeah.
Well, Liz, I got to tell you, we could probably do this for another couple hours.
I know.
And there's a good chance I'm going to invite you back.
Okay.
We'll have another bourbon.
Love it.
I'm going to make you a bourbon drinker one way or another.
Coffee?
Yeah. So I really do appreciate you coming and talking to me. I hope everyone found some useful information. But Liz, is there anything you'd like to tell the audience before we end?
Yeah, I do need to say, because we've talked to several different loans, that it is based off of applicants, so you don't always qualify. I do need an application to run through it and review that, set you up on a plan and look at that, give you a clear mortgage path, you know, review your cash to close, you know, answer all those really important questions that you have. So I hope you reach out to me.
And you also have a YouTube channel you're getting started. Would you like to tell everyone how to find you on YouTube?
Yeah, and you can find me on my website, YouTube, Facebook. It's Land Home with Liz.
LandHomeWithLiz.com.
Yep.
Awesome.
And it's Land Home with Liz on YouTube. So
great. And if you're watching this on YouTube now, please like and subscribe. Go over to Liz's, like and subscribe to her channel as well for sure. And always enjoy your adult beverages responsibly. And Liz, thank you again so much for coming to join me.
My
It's just
pleasure.
been a fantastic evening with you.
Yes.
So I really enjoyed it. Thanks a lot.
My pleasure. See you later.
Catch you next time on Bourbon with Your Broker.